So, since I've been talking about deals that are popping up, more deals are popping up. I have people sending me stuff that they're selling, and so I'll figure I'll just analyze one. One popped in this morning. I'll just kind of throw it out there, tell you what I would do if I was buying this thing. Because if you're interested in that kind of a deal, looking at other deals, there's more that keep popping up. But I thought, well, this one just popped in. Figure what the heck? Let's talk about it. See if it is a deal. Let's see if it's something that's worth looking at. So today, July 18th. We're going to look at some deals, and it may be something we do kind of regular. So I'm going to pull this thing up on Zillow so we can see this thing's $158,900 value is the claim here. The individual asking for $145,000. The thought process on the rents is $1,560 a month, which is at $145,000. That's a pretty good deal. That's what a lot of people were looking for, that 1% rule. Well, let's blows that 1% rule out. So not a bad looking little place. Looks like they did some pretty good stuff to it. Me personally, I'm not a big fan of carpet, but that's each person their own. Actually, since it's upstairs is what that looks like. That's probably better. You don't want to be walking around hardwood floors on the upstairs. It sucks to be downstairs from that. Lived in enough apartments to know that growing up, and when I was not when I was growing up and early in my marriage. So look at that one. Not bad. I think that's a pretty good little deal when you're talking about $158,900 as far as the value. And it's a 3 bedroom, 2 bath. So that right there is also really good when you're talking about that bed bath count. So let's run some numbers. This is how Aaron Chapman would buy this because it's 150. What did I say? It's $158,900 value. We're talking about $145,000 purchase price. So how would Aaron Chapman do this? How I do is my armored equity system is what I refer to it as utilizing money that's in my whole life policy. So whole life policy, basically in a way. Now I'd have to explain this to you in a detailed manner. I'm not going to go through it here, but more or less, I'm acquiring that property almost cash is what it looks like. But it's with a lien against the property, utilizing my whole life policy. If you want to understand how that gets done, there's ways we do that. I do that personally all the time. So, $145,000 acquisition, right? So if I've got a lien against that to buy it for $145,000, I can come back and do a rate and term refinance on a lien that I have on a property. So if I finance the property for the entire purchase price of $145,000, which is what the price of this is, and I come back and do a rate and term refinance on that, I'm going off of that current value of the home, which would be $158,900 if that's what my appraisal comes in at. So $145,000 out, but I have $158,900. Get your calculators out and follow me with this one because I'm not going to be showing the numbers on here. So $158,900 is my value. I can come in at an 80% refi. That's $127,120 is the new loan. So I bought the house with 100% financing on $145,000. I come in to do a rate and term refinance at $127,120 because that is 80% of $158,900. Well, that means if I have a $127,120, I am in this thing. Let me see here. Since I did the 145,000 is what I had into it originally. Now subtract out the 127,120 loan amount. That puts me at 17,880. I'm in that deal down payment wise for 17,880. Well, that is actually on the 158,900. If I can get my calculator works, my thumbs. That's 11.2% I'm in the deal. I'm only in it for 11.2% plus costs. So let's say my costs are putting me at another, let's just go high. Let's say it's 12 grand, right? So I'm 127,120. Actually, let me 58.9. So remember, 17,880, write that down, 17,880. Then I'm at 12,000 in, let's just say total cost, taxes, insurance, everything. That's a lot. That's 29,880. Well, you divide that 158,900. That means I'm in this thing for 18%. Guys, that's not bad at all. I'm in this property, bought this one. I only have 18% tied up into it with costs and down payment and everything. So with that being, that's $29,880, right? So I'm going to write this down because now we're going to do some more math, right? 29,880 is what I am in on this thing. So I had, let me see here, $158,900 value. That means I got 127,120 loan, right? Is the loan that I got when I did the refinance of that private money loan, if you will. And if you take that, divide that over 30 years, it means 30 years somebody's going to pay that off for me, my tenants, because I don't buy a house that I'm not going to keep tenanted for the entire time I own it. That's $4,237 per year is what's being paid back to me, basically, averaged over 30 years. This is a long game math, guys. I know there's an amortization table. Don't bust my balls about that. Now, you factor that into what you have in the deal. 29,880. That's what's left over after your refi and the closing costs and taxes and insurance and all that stuff. Now, again, it's all rounded off. Well, you divide that into that 29,880, and we are at 14% every year is what you're getting. So what you left in the deal, 29,880 is 14.1%. That's what you're making off this thing, just off the amortization of the deal. Now, let's say on this, you have $158,900 house, $158,900 is the house value, right? 158,900, do that math. And it's only going to appreciate 2% per year. Let's just say 2. Let's beat the shit out of this because we're talking about Detroit. Well, times 0.02, that's $3,178 a year that it will appreciate. Now it's going to appreciate compounding more because that's only first year. So it's going to compound 2% off of the next value and the next value. It gets pretty big. Well, you factor it into what you invested, your money that's left in the deal, 29,880. That's 10.6%, 10.63 on the appreciation of 2%, 10.63. So right now you're 24.73% return before a single dollar of cash flow. Now let's run our cash flow. If you have not downloaded the QJO investment tool, you need to right now go to your app store, pause this, and then go to your app store and get the QJO investment tool. Then we're going to go to the third calculator called the mortgage amortization schedule. So what we're going to do is we're going to put in there, and this one, 127,120 in the purchase price because this is not designed for refi calculations, and then nothing in the down payment because we're doing this based upon that loan amount of 127,120 after your rehab. Now let's say this is an ugly rate. Let's just put 8% in that sumbitch, just cuts. Now we're talking about a principal and interest of $932.76 on this thing, $932.76. Right? And what did we say this was renting for? It was, now this is what I'm being told by the seller. You got to figure this out on your own. $1,560 a month. $1,560. Well, the principal and interest is $932 at an 8%. It's not 8%, but I'm just telling you what it is if it was 8%, because we're beating the numbers up. Don't get caught up in the freaking interest rate. Like, oh shit, Aaron says it's 8%. No, I'm running hard numbers so you can get that. So, and let's say taxes and insurance is another $200, right? So now we're at $1,132 a month is the principal and interest, tax, and insurance on this. But what's your rent? $1,560. $1,560. Guys, do the math yourself on that. Even if you have a 10% property management, do the math. You're not finding deals like this out there on your own, especially when you're out looking and talking to people that are selling houses at full market value. These are hitting my desk quite a bit. So you want to talk about this one? You want to get into the weeds as to how I set that deal up like I just talked about? Call me. We'll go through the details of it because this is what we do. This is how we do it. This is how I've been doing it for a very, very long time. I do it personally. Family trust, holding company, LLCs. In fact, let's talk about that. If you haven't done this yet, here's where you need to go next. You need to go to aaronchapman.com. Okay. And then you got to scroll down to right here. Set up your LLCs and taxes. Click Get Started. This is where you set up the appointment. I have got a great team to talk to. You know, you don't have to talk to them. Nobody says you have to, but if you want to be able to set up trusts, holding company, Wyoming holding company, right? And then individual LLCs in the states where you're buying the property, hold those properties to build that whole thing. And I've got something else I'll be able to show you. On Tuesday, it's really, really sexy. We can be able to set this thing up for you in a way that is what people talk about. Now, the problem is I've seen a lot of law firms build this out, set this up for folks, but they want to charge like 17, 20 grand to do this. And they do it but in ways that we can't use it on the lending side. You have to be able to lever it to make the money. That's where the value, from my opinion, again, I'm just Aaron, right? You got to figure this out for yourself, but I'm plugging into people to talk to. They have an accounting firm and a law firm under the same umbrella, and they're not going to stick you in the ass when they're setting this up for you. They've got a really, really special price for you. So reach out to them so we can set these things up for you. Now let's talk about the market and what is going on out there. That's why you come here. So we're going to talk about the market. So we did talk about how CPI came in hotter than anticipated, the consumer price index. The core CPI was flat from what they anticipated, still going up, right? It's up 2% or 0.2%. No, 2%, sorry. But that is still, no, 0.2, sorry. 0.2% from the previous reading is what it is. It's still going up though, right? It's still going up annually. It's still not something that's receding. It's not like we're losing. It's just not going up as fast as it was. And then you've got the core, the producer price index showing that that's shrunk a little bit, but the core producer price index is also showing that shrinking. So we're seeing some of this drop, and the industrial production's up. They're producing more. Yeah, capacity utilization, little bit up. You know, we're using more of the capacity we have to produce. Retail sales look like they went up a bit. When you take the autos out, they went up even more. So people aren't buying the autos as they are other things. Jobless claims, they dropped. The initials, at least, and the continuing claims, they're continuing to stay about even, pretty close to flat on that one. Housing starts looked like they jumped a little tiny bit. Building permits went up just a little tiny bit. What's also very, very interesting is import prices. They did go up because we have the tariff situation, right? But that's a one-time hit. They're talking about that right now. Tariffs were a one-time effect on price, not a continued inflation. Inflationary thing. It's just a one-time increase. We have export prices. What's really cool about that? That went up considerably, because before it was down negative 0.9% of a percent. Now it's actually up 0.5%. So that's a pretty big swing when you consider what's going on there. So maybe some more things working in our favor the way the policy is happening. So let's look at see how that's affecting the charts. Should we go? So I drew this channel because it was staying right within it. And I drew that earlier this week, and I drew it way back here to see where this channel is forming. It's forming here, and it's actually stayed well within it, literally just bouncing right in it. And I thought yesterday, I'm like, well, we're at the top. It's going to turn and come down, but nope, bounced right out. So we've got literally a runner here. We'll see what it does. So if it runs outside of this, we can see that was, and I drew this line, this was our bottom. As I had drawn it, even though the channel was forcing it down, that was our bottom. So that looks like this is going to be our trade range. In fact, I'll put another line right here. So we may be seeing this sideways trade range for a little while. I didn't move enough. So we're going to see probably something move along these lines for a little bit. This is going to be our trading area between these two. So that's what I see going forward between those two green lines. Let's see how that plays out. Kind of hard to say how it's going to play out, but that's at least what I'm thinking at the moment. So I'll shade this all in and see if maybe we'll just run with this for a while and see if this actually plays out to be the thing, trading right in that range. So I'm going to go ahead and I'm going to save this look just for the hell of it, so we can talk about it later and see if maybe this ends up being the channel that it plays in, right? We got the downward one, we have the upward one. Look at it. We had an upward, it did, hit this peak, came down, hit that bottom. This might be where we go. So we may be playing locks and floats in this particular range. Kind of hard to say because the market has a way of not being predictable, other than price action seems to be within range. But if you want to talk more about these deals I keep running across, call me up. Let's schedule some time. I don't mind going over individual ones with you and show you what's out there, but I wanted to at least run by ones like these kind of deals are real. Come on, guys, 24.7% before cash flow, before tax benefits. That's what this one is numbering out at. And again, it's based on a long 30-year AM. Some people may shit on my math. I don't care. You know, you guys can go do your other math out there, because that math ain't mathing right now. You can't just go after cash on cash return and that's it. You end up with some shithole in St. Louis that just pays out great cash flow, but you're going to take every single cent of that cash flow every time a tenant leaves and fix that piece of crap. So we got to think about where we're doing our business at. Now, I'm not saying that there's any state that's better than another. I'm just pitched out something just to pitch it. You got to be careful you're working with. You got to make sure that it's done right. The pictures look great on this. I can't say what it is. You need to get an inspection. Always inspect those damn houses. If you're not inspecting it and then asking for things to get fixed from the inspection, then send the inspector back out, you're hurting yourself, not hurting them. Appreciate you guys. We'll talk to you on Tuesday.